In this tutorial, I'll be showing you about the stock, and just click enter and you can see the full name here. AQN is the symbol. It's 12.97 US dollar for one stock. And we don't know the market cap. That's an important thing to know. Please search the market cap. Is it a billion firm or millions firm? You need to know that because we need to know if it's a big size firm or if it's a medium-sized firm, and it's paying a dividend yield, which is brilliant, which means financially very strong, because any firm that is able to pay dividend, that means they're financially strong, because after paying their loans, liabilities, creditors, they still have extra money. That extra money it pays to shareholders as dividends. Even if the dividend yield is less than 1%, that's a brilliant news, because that means they are financially very strong. Let's go to Wikipedia and see when was this founded. I can see it's founded in 1988. Now I'll just copy this exactly from Google, okay, and paste it here. Type Indeed reviews, enter, and I just want to see the reviews in Indeed, and I think I'll go to company reviews, and I'll paste in the thing, click enter, and I think it hasn't gotten, like, it doesn't have any reviews in Indeed yet. Nobody has given reviews. So what I'll do is I'll check this in Glassdoor as well. Maybe somebody has given reviews in Glassdoor. So you know, I have 33 reviews and it's 2.6 star. Please read through the reviews yourself. Check out the jobs listed, the salaries they're paying, the interview question, the benefits they're giving, and the photos of the firm. Let's go to Justia Patents and see what patents they have. And I'll paste it here exactly. Click enter. I can't find any patents regarding this firm, so I'll just move this one. Oops, sorry. Click enter. No, I can't find any, and let me remove that now and click enter. Maybe I can find any. So I am looking at this firm, but I'm not sure if that's the same firm or part of the firm, so I'll just search it in Google. I think it's part of the firm. Um, I think that's part of the firm, but let's go to Algonquin Automotive. Let's have a look. Um, I think that's a different firm altogether. Um, I think no, I think that's a different firm altogether, because I'm looking at Power and Utilities one, but that's a different one. I don't think it has any patents, I would say. So any firm that has patent, that means they are very very strong, because it's difficult to beat that in the market. Let's go to Yahoo Finance and see if what the key executives are getting as salaries. That's very important for me to know. So I'll paste in AQN. I'll press that because that's Nasdaq symbol. Go to profile, check out the sector, industry, and the employees, and I can see there are 5 key executives. None of their salaries have been shown. It says not applicable. I need to know the salaries. I need to know why it's not applicable, because salaries are very important for me to know, because that means there's more transparency and we can build trust. So that's very important to know. Let's go to macro trend. Go to price ratio, price book ratio, and type in the symbol and click there. If price book ratio is less than 1, that means stock is cheap, it's undervalued, and it's a discount. If it's more than 1, that means stock is expensive. The higher the number goes, the more expensive it gets. Please let it load right now. Right now I can see that the price book ratio is 1.71, which means somebody buys right now will be paying 1.7 times more money. It's 1.7 times more expensive. Somebody bought in 2018 June, they paid 1.24 times more money. They bought it for $9. They paid $9 to buy something that was $7 worth. Let's go to other ratios. Go to current ratio. I'm looking for current ratio of it less, if it's less than 1, that means that liabilities are more than assets, so it means stock is very risky. If it's less than 1, if it's 1.5 or more than that, that means stock is safe, it has a good margin of safety. Please look for 1.5 or more than that. Right now I can see that it's less than 1.5, so it's a risky stock. Let's look at the previous trend. So it's, I want to see if it has ever been above 1.5. Yes, twice it is in 2016 above 1.5, but there's no consistency, so that's not very you know important for me. So I can see that since 2012 December, consistently up till now, it has been less than 1.5. So it's a very risky stock in terms of current ratio. Let's look at debt equity ratio. I'm looking for zero point 0.5 or less than that for it to be very good and safe. This ratio will tell me if the stock is mainly operating on debt or equity. Let's have a look. I can see right now that it's a lot more than zero point 0.5, which means it's a very risky stock. And you can see vertically up, liabilities are more than assets. Liabilities not, I mean, long-term debt is more than equity. Long-term debt is more than equity. That's very dangerous. It's mainly, we're looking for zero point 0.5 or less than that for it to be safe. Let's look at the previous trend. Has it ever been zero point 0.5 or less than that? That's my question. I can see since we have data 2012 December up till now, consistently it has been more than zero point 0.5. It's a very risky stock in terms of debt. Let's go to return on equity. I'm looking for 8% or more than that for it to be brilliant. And it's less than 8%. It's it's not the return I'm looking for, although it's a positive return on equity, but I'm looking for 8% to be brilliant. Let's look at the previous trend. I can see consistently it's very it's always less than 8%. So since 2013 September up till now, consistently it's less than 8%.